Good morning, everybody. I'm Ellen Bruno. I'm a cooperative extension specialist in the Department of Ag and Resource Economics at UC Berkeley. Thank you all for joining this morning. This will be the last webinar in the ARI discussion series for 2020, but there will be more to come in the new year. We had one scheduled for December 15th, but we have to cancel it, but we'll be rescheduling it. And I'll tell you a little bit more about that at the end. So this series is being organized by the UC Cooperative Extension Specialists in Ag and Resource Economics, Brittany Goodrich, Mehdi Namadi, Tina Saitone, and myself. This meeting will run for 1 hour. We're going to have guided Q&A with each of our guests, and then we'll have open Q&A with the audience at the end. So please submit your questions through the Q&A function at the bottom of your screen, and we'll collect them and moderate the open Q&A at the end. These seminars are being recorded and they'll be available on our website, arediscussions.ucdavis.edu. So today we have 3 great speakers to talk about the economic impacts of trade turmoil in California's tree nut and dairy industries. We have Dan Sumner, Professor of Agricultural and Resource Economics at UC Davis, who's also the Director of the UC Agricultural Issues Center. We have Tristan Hanon, a PhD student in the Agricultural and Resource Economics Department at UC Davis, and Ali Amin, the CEO of Primex International Trading and Primex Farms. So go ahead, Brittany, take it away.
All right, thanks, Ellen. Okay, we'll go ahead and get started this morning with Dr. Dan Sumner. So can you just give us an overview of sort of what's been going on the last few years with regards to international trade and how has that been impacting California agriculture over the last few years?
Sure, I will. Thank you for inviting me. First, let me start by sharing a screen because I think that will, I have a few slides that speak directly to some of these points. So let me confirm you can see that slide.
No, we can't see.
All right, so let me try again. Share screen. Oh, here we are. Screen 2, then I click that button. How's that?
Yep, that looks great.
And because the word turmoil is the word I would use to describe the last few years of international trade, and I put it that, and we've gone through a period for several years of, in a sense, government-induced turmoil, and then of course this year we have COVID-19 on top of that. And it's not it's a separate phenomenon, but the response was the same. So Brittany, the term I would use is turmoil. The second term I would use is resiliency, because I think it's fair to say that the agricultural and food sector have been incredibly resilient, both in the response to retaliatory tariffs and then in response to COVID-19 on top of that. And so we've seen a remarkable amount of resiliency on the part of the food system. Struggles, so I don't want to say it was easy, but remarkable work. The final thing I'll say here is that, in fact, just this fall, a few weeks ago, USDA put out a report about agricultural trade to China. And as would be expected, they were bragging about what great accomplishments. And I was saying earlier, not a single word about California tree nuts. There was a slight mention of pistachios. The words almonds, pistachios, walnuts doesn't appear in that report. There's some mention of dairy, but only in the context of some changes in restrictions, not actual accomplishments in trade. The emphasis, as one would expect, I suppose, is on the Midwest crops and hogs and cattle and things like that.
Got it. Thanks, Dan. So I mean, you've alluded to this a little bit already, but what have been the biggest ag industries in California that have been impacted by some of these trade policies?
Yeah, well, I would say the biggest industries affected by the trade policy changes and the turmoil surrounding it have been the biggest industries. So that's the tree nut industry, the dairy industry, and the wine and the wine and wine grape industry. The grape industry is also a major export. It's also a major producer, but a major exporter of table grapes, raisins, and wine. So grapes figure prominently here. Surprisingly, we get industries like the hay industry that also exports a lot, which is a bit of a surprise to some of us. But the dairy industries in Asia and including in China are pushed to import California hays.
Got it. So let's kind of focus in maybe a little more on tree nuts now. So who are some of the major export markets for California tree nuts?
Yeah, and I'll leave this slide up while I talk about the major markets. They really haven't changed. And one of the remarkable things about the tree nut industry is how diversified the portfolio of markets are, including the U.S. market. So we keep about a third of the tree nuts here in the United States, a little more depending on year to year. Uh, a lot goes to Asia, including China, Japan, Korea, and other, and scattered around Asia. India has been a growing market off and on. And unlike a number of products that we sell from the Western United States, tree nuts also go to Europe. And one of the remarkable changes is how aggressively the tree nut industry has supplanted European tree nuts, not only in the world market, but also right within Europe. That's true for competition with Iran, for the European market for pistachios, but also almonds and walnuts competing with European supplies, particularly Spain, but increasingly other places that have tried to cash in. And it's very interesting that the California almond industry, for example, now ships a lot of almonds to Spain to be repackaged and repositioned around the rest of Europe. And it just goes to show how competitive those industries would be. It's not easy. And as tree nut markets have looked good, everybody else in the world has wanted to jump in, and competition, particularly in walnuts, say from Chile, for example, have been growing. But so far, at least, uh, prices aren't always what people wish they were. This year isn't a good example of that, but still substantial export growth.
Got it. All right. Thanks for that. So I'm wondering what have the impacts of some of this trade policy been on the tree nut industry? So have we seen, as a result of increased tariffs, have we seen exports decrease in the last couple of years, or have we seen the value decrease? Or could you talk a little bit more about the direct impacts of that?
Yeah, and the answer is it's really hard. And I'll tell you, there is, yields go up and down. Pistachios in particular are alternate bearing, but other yields go up and down. Products that are produced, these are not particularly easily storable. Almonds can store a little longer, walnuts in the shell, things like that. But for the most part, they're going to be sold pretty soon. This is not like soybeans that can be stacked around for a while. So that means the responses are going to be in price. And is that due to when you see some responses, we've had some problems getting pistachios or walnuts or almonds into certain markets, not just China but some other places. Is the price response due to the fact that we had a big crop, or is it and all of these, particularly almonds and pistachios, have had remarkable increases in bearing acreage? So are prices down due to that, or was it the trade side? And it takes a lot of teasing out of data. The causation question, as we all know, is not easy to answer. And you give me 2 years worth of data, and I can tell all kinds of stories and 6 or 8 alternative explanations. But so I'm not going to. There's no question that slowing down exports to a market through a trade turmoil and facing high tariffs is going to have a negative effect on the market. So it's not the overall effect; it's how big is it that's the matter here. If you just looked at this chart, and I think you can see these tree nut trends. By the way, we have to blame the pistachio industry for screwing up this chart. Normally, so I started at 1.0 in 2000. Normally, when an industry has a 5 times increase in 2 decades, you say that's a remarkable growth. And that's what almonds and walnuts have done in the value of their exports. But since pistachios have gone up 22 times, they end up being pretty dwarfed on this chart. And you can, it looks like almonds and walnuts have almost stagnated, but that's a 5 times increase in 2 decades. Remarkable increase. And the biggest thing I would say is that prices haven't collapsed with this big of an increase in quantities. And I'll show you the quantity picture as well in terms of exports. And so that we're now, pistachios in particular, we're nearing a $2 billion export for pistachios in 2019. It was close to that. We have some alternate bearing issues. We export, by the way, we export the year after it's produced for the most part. So we do export a lot in November and December, but a lot of the export happened in the following calendar year. And these are calendar year data that I'm showing you, not crop year data, which is much harder to pull together. But if you looked at this, you'd say, gee, is 2019 a bad year? That was the year that trade turmoil really hit. You'd say, gee, it doesn't look bad. It jumps up, you see it jumping up here remarkably. For almonds, these are mostly on the value of exports. It's mostly price things. Let me show you the quantity numbers again. And here, if you tease through these data, this goes back 3 years to try to tease out 2018, 19, and 20. But what dominates here is the seasonal pattern. So the red line there is pistachios, and they jump up in November, high in December, and start gradually coming down to the following September, and then jump up again and come down again. So you can see that seasonal pattern in the quantity exported. Now, did 2019 look particularly bad relative to 2018? Maybe if we really worked on the data, we would see something there. But what really comes through is the seasonality, the jumps in the seasonality here. And these are export volumes, again, indexed to the beginning point, which is January 2019. I put the quantities on the chart just to make the point that, oh, by the way, I have a typo in the almond number there. Whoops. Let me go back a couple of slides here. I just noticed that the almonds are supposed to be 90 some, I think it's 98 million pounds. I moved the decimal place there. So it was 76 million pounds in 2017, gone up by about 25%. So all of these are growing steadily. And I guess I did the same thing with, let me go back. I'm pointing at the slide. I did the same thing. I adjusted, I made these more readable this morning to show what happens. Walnuts jumped to about 19 million pounds. So pistachios are a lot less quantity and a lot more value than walnuts. But I look at these data and you say, gee, did we have a big effect of the trade turmoil? It was there, but I wouldn't say that was what was dominating the industries. What's been dominating these industries is particularly almonds and pistachios, the very large increases in bearing acreage. And I'm sure Ali will reinforce some of this, and then I hope can give very specific examples of his trade experiences.
Yeah, thanks, Dan. So do you think, I mean, I think you've kind of answered this already, but I'm just going to ask it to get you to answer it a little bit more specifically. But so do you think because of some of these tariffs, so you mentioned some competing countries like Chile for our tree nut production in California. So do you think that because we have higher tariffs, we're actually losing some market share in some of these big export markets?
As usual, we have to rephrase the question to say, did we lose relative to what it would have been? I mean, our production is going up like crazy. but so is Chile, particularly for walnuts there. They're pretty specific to the walnuts. On the pistachios, we compete with Iran and Turkey a little bit, but they've been traditional. It turns out, and we highlighted this in a paper that you circulated, it turns out our the trade turmoil on pistachios hit in the year that Iran had a historically terrible crop. And so it sort of saved us in that way. But there's no question facing big tariffs is bad news. And that it certainly hurt us in terms of exports. Again, I want to say we'll see that in prices probably more than quantities, so we have to think about what we mean there. But the question about what this means going forward, I think, is we're all watching during the transition what happens to these kind of tariffs, and we know in the past, at least, the people that have been advisors to President-elect Biden in the past have not been huge supporters of trade agreements. That was true during the Obama administration, where they didn't push the TPP at all. We know TPP had almost no support in Congress on the Democratic side. So it's a little concerning what's going to happen there. And of course, China hasn't become more of a friend in the last 4 years. In terms of public policy in general, international policy in general. So it's really up in the air whether or not these tariffs will go away. I mean, they were instituted by executive action, so it takes nothing on the part of Congress to change them. It's just a matter of the president saying, I want to reverse a bunch of stuff. It may take a few months, but it's not going to take much. But we don't know if that's going to happen given the record of the new administration.
Right. Okay. Well, you preemptively answered my question about what's going to happen going forward. So, is there anything else you want to say that you didn't cover that I didn't ask you about?
I think the other big story in this turmoil has been government payments. And let me go back to a slide because I do want to say a couple of things about government payments. Just this slide right here. These are standard farm bill payments in 2017. And in 2018, we started with these market facilitation payments. That's the blue part here that jumped up remarkably, pushed government payments into new territories, and really took the place of a lot of what had been old farm bill style farm payments. In 2019, they jumped even further. So we were making very remarkable payments to agriculture in an ad hoc way. There was no legislation. There was nothing like that. It was just the president telling the USDA, make a bunch of payments. As usual, almost all of those, and I have a slide that would document this, but we can just say almost all of those went to Midwest and Southern crops. And there was a little breadth in the sense that it went to pork as well as corn and soybeans and cotton and wheat, etc. But the crops like tree nuts, specialty crops, they weren't left out, and they gathered a little more payments, but in 2019, but measured in millions, not billions. You know, so it's really a different sort of a deal than what the Midwest crops. I'm not going to second guess the guys at USDA who had a bunch of formulas to try to do this, but it was consistent with the pattern that we've seen for a long time, where Southern and Midwest crops get a lot of payments. When we turn to 2020, the supplemental, the basically COVID-19 payments are the big green part. And you know, we're now making farm payments that are 3 times as large as they were in 2017, mostly COVID-19. And I call these essentially compensation payments, in the sense that somebody in the government said, sorry, we took away your market. We're going to compensate you for that. Almost like we had to take your land to build a road, so therefore we'll give you some payments. Here we took your economy away with the shutdowns, and we're going to give you some compensation. And of course, in 2020, it wasn't just agriculture, it was everybody else. And again, there were some payments to the specialty crops, of which tree nuts are a part. Again, that was about 150 million compared to about 22 billion to the rest of agriculture. So there was there was some money there for the tree nuts and the other specialty crops, and I think they were happy to get it. So let me stop there and let you go on.
All right, thanks, Dan. Okay, so now we're going to move over and we're going to talk with Ali, who is CEO of Primex International Trading Company. So welcome, Ali. Could you tell us a little bit about, you know, just your operation in general, what you do, what crops you trade, and where you're trading them? Oh, I think you're still muted.
There you go. Okay.
There you go.
Yes. So should I start sharing my screen?
If you'd like, that's fine.
Okay. Okay.
Oh, wait, I think there we go. Oh,
Okay.
no. Where you still don't see your screen. We saw it for a second.
Okay. I guess maybe Dan's screen share has to.
Yeah, I think everybody's stopped screen sharing now.
Okay.
So maybe try doing it again.
All right.
There we go.
Okay, so this is just for me to review quickly from it. I come from a pistachio growing family from southern part of Iran, Rafsanjani in particular, which is where it all started. I came to US in 1975 to go to college, and 1979 is where the revolution happened, and I ended up staying. And my uncle had been in the import of nuts and dried fruits, in particular pistachios and cashews from India. And so in 1982, I started working for him in California. Because of California pistachios, he knew that that's where the supply source is going to switch to. And in 1989, I started Primex International with the focus to trade export and to export nuts and dried fruits. And so initially starting with pistachios and eventually going to almonds and walnuts and hazelnuts and pecans. In 1996, we also started an office in Hamburg, or a company in Hamburg. Currently, we have a total of 10 traders, 4 that are senior traders that basically buy and sell and take positions at will. And then when my uncle sold his company, going back a little bit, in 2002, after he sold his company in 2001, I started a pistachio processing facility, Primex Farms, with a 15 million pound starting production. Now we're about 120, and we have another round of expansion that will take us to 140 million pounds of production. And that would maintain our position as the number 3 processor. What's interesting about pistachios, or at least a point to note, is that it's probably, globally speaking, probably is the most concentrated commodity, there is. So Wonderful is about 60%. Sutton Farms is about 17%. We're about 9%. So within 3 companies, it's already over 80-some%. And the balance is among another 5 companies. And so it has its own unique behavior. And usually once you have somebody over 50%, which Wonderful would qualify for, they will become price makers. So sometimes the behavior of the price fluctuation is not just purely supply and demand, and it becomes a decision made by the market maker. So having said that, I will move on to the next slide, which would be walnuts as the commodity that I would consider most affected by the tariffs or counter tariffs. Walnuts was having a huge success story by virtue of entering the Indian market and actually negotiating a lower tariff. India has had walnut production, and it still does, and therefore had higher tariffs on walnuts than it did on almonds and pistachios. As a result of those reductions, walnut shipments to India took off, and within, I would say, a short span of 3 years, they got close to 50,000 tons, with the expectations that it could very quickly reach, I mean, in that trajectory, within another couple of years, it would have reached 100,000 tons. However, as a result of the tariffs, taking it to 100% and later on to 130%, that pretty much halted that and reduced it back to probably below those high tariff levels, below the higher tariffs prior to reducing them. So this is a year end, and this is crop year end for 2019 crop. So this shows 2016, 15, all the way to 2019 shipments. And you see that basically there's been up and down, and they have correlated with the available supply. So what's important to also mention is that when you look at the price behavior or trend, you need to recognize that there are various components that impact the price. Supply being the most important component. Tree nuts, by virtue of the fact that the supply is a given, whether it's too short or whether it's a bountiful supply, it is a given, and there's nothing we can do to change it, at least for the next 4 years if it's almonds, or 6 years if it's walnuts, or 8 years if it is pistachios, before they all get to mature production. So, and if it is too much, nobody is going to pull the trees out because they're big investments. It's unlike perhaps raisins and so on, and certainly row crops react to demand very quickly. Because of that, of course, the lever that will make demand to match the supply or match the movement needed is price. So outside of the price lever, of course, economy is a factor, and as sometimes we see economic ups and downs, let's say within the US doing better than, let's say, Europe, you can see shift in percentage of domestic consumption versus EU consumption, or what we have seen Asia having growing economies, then you can see a continued shift into shipments into that market. Exchange rate is another component, and Dan also mentioned competition from other origins. So for walnuts, Chile has become bigger and bigger competition. The rate of production growth in Chile is higher than in the US. So there are now over 120,000 ton production versus the US, which used to be in the mid 600,000 tons, and now is getting close to 800. Projection of or objective estimate for walnuts was 680,000 tons. So let me see where we are on walnuts. Which other slide?
Yeah, Ali,
yes.
In the interest of time, so we make sure that we have time for questions at the end,
Sure.
could you just talk about maybe how your operation specifically, has that been impacted by any of these trade agreements? Have you had to switch buyers or switch export markets or anything like that? Can you talk a little bit about that, please?
Yes, I mean, I would say to the extent that we were impacted is on the growing side. We are only growing pistachios. So, you know, while Dan also mentioned that when the tariffs happened in China for pistachios, was the same year that Iran had a pretty much what you could call a crop failure. And therefore that counterbalanced, and therefore we ended up having actually more shipments to China. Other than that, on the trading side of our business, it has no impact on us because you know, the impact would be on the growers of almonds and walnuts. And it's important to note that at the end of the day, whatever crops we have, we will have to get them down to an acceptable level of carryover. And so that you see the price fluctuation.
Got it. Okay, thank you. And then one other thing I wanted to know, I was curious about, is whether or not you've made any adjustments to your operation, either on the trading side or the growing of pistachio side, just with this idea of trade agreements impacting, you know, your operations and international trade in general. I mean, have you thought about making changes or anything going forward in response to that?
You know, for us, luckily, we are present globally. We do very little domestic sales. That's the area we're not that involved in. But being present globally, and again, the benefit for us being a trading company and having traders, we have a maybe different mentality than just sellers. So we react very quickly to these changes. And I would say on a day-to-day basis, make decisions and sell forward or hold back. And you know, those shifts, actually you can see them in aggregate from, you know, one market to another. So what I could show you is, especially because of COVID that Dan mentioned, COVID in domestic markets, in Western Europe, Australia, Canada, pretty much the developed countries, ended up being a positive impact where consumers went after more dry goods and goods that they can store, one, and two, because more of the consumers that stayed at home and because the travel and entertainment budget was now reserved, and being at home, they consumed more snacks, and that's including chips. And within that, they consumed more tree nuts because it's healthy. And let's say India's consumption went up, and partly because the Indians already know the health benefits of nuts, and you know, general population, even though the capital income per capita or spendable income per capita is lower, nonetheless, the consumption went up because their perception of eating healthy will boost your immunity.
Got it. All right, thanks, Ali. I think we'll go ahead now and turn it over to Tina and Tristan, who are going to talk about the dairy side of things. So thanks so much, Ali.
Sure.
Thanks, Brittany. Tristan, while you have an opportunity to share your screen, I wanted to welcome you and thank you for coming on today and sharing your expertise about the California dairy industry. Certainly another important California industry that's been affected by this trade turmoil. I'd like to start off the discussion with you by asking you about some of the major export markets for California dairy products, and then also about some of the retaliatory tariffs and other policies that have faced the dairy industry.
Of course. And thanks for having me as well. I'm very excited to be a part of this. So first of all, I'm hoping that everyone can see the slide that I've put up. This is a table showing the top 10 export destinations for California dairy products. So specific to California, we focus primarily on exporting to Mexico and then a broad group of Asian markets. That largely reflects US export destinations overall. If you look at the US, top US export destinations, you'd also have Canada and Colombia, but we don't export a lot directly from California to Canada. That tends to come from other parts of the country. So in terms of retaliatory tariffs, the countries that put those in place were Mexico, Canada, and then of course China. And for California, the important markets there were Mexico and China. This is showing kind of the past few years, but if we also look at the comparable series of months between January and September between 2019 and 2020, we can see that those largely are the same countries. There's a little bit of shifting in the order, perhaps, but again, Mexico and China tend to be towards the top. So we can see that trend has continued. I'll note, just to look at the total here, we're actually seeing a much larger export amount in 2020 as compared to 2019, which is interesting because it does show that there might be some recovery from the tariffs, but also that through the COVID impacts, we're actually seeing that we're on track for a relatively good year in terms of exports. So.
Thanks so much for that summary. And so you actually alluded a little bit to the answer to my next question, which was the impact of tariffs. And you've kind of mentioned that COVID-19 has actually kind of dominated that retaliatory tariff decrease. But have we also seen exports shift a lot? Have our competitors been taking advantage at all, or have we been essentially dominating the export market?
That's a good question. It's interesting because if we do look at these major export destinations in terms of shifting trade patterns, we can see that, if, for example, the retaliatory tariffs were to keep some trade out of China, a lot of what we export could just as easily go to another Asian market. So we're already kind of set up in a way that allows those exports to be relatively fungible. And to look at what tariffs exist, just to be a little more explicit, I mentioned that Canada put some retaliatory tariffs in place. That was, in terms of dairy products, that was really just on yogurt, which it turns out is not actually that significant. So I'll be setting that to the side for the most part. But Mexico put tariffs on most cheese exports, and then China put tariffs on pretty much every dairy product. You'll see a long list there, but this extends to things like infant foods and lactose and casein individually. So they spread those tariffs much more broadly among dairy products. So to look at kind of a trend over time of what exports looked like during this period, you'll see I've put in dark gray the period where the retaliatory tariffs from China were in effect. And then in the lighter gray area, China has agreed to allow some exceptions to the tariffs for certain products. That is not taking the tariffs away, but it has allowed for some additional access to meet agreements that they've made with the US. We can kind of look at this graph and see that, you might be able to say that there was a decrease here through the latter part of 2018 and that seemed lower. It's a little less clear on the California trend line, but in general, as Dan was saying before, it's difficult to separate what this effect might have been from other things that are going on in the market at the same time. We can see a bit of an uptick in exports through the what part of 2020 we've seen so far. And I'd like to say that that's due to this opening of exceptions, but again, it's difficult to say that that might explicitly be the case. If we look at the trend line with exports to Mexico as well, I'd say it's even more difficult to see whether there is a trend. And of course, this is looking at just exports of cheese. So it's, of course, a little more specific, but in terms of the California exports, it seems like there's been very little impact due to those exports. So again, it may be that there's just too many different economic forces going on, but in general, it's hard to say whether there's been an effect. Again, like I said, it could be said that we're able to easily shift exports elsewhere, but it's possible that these tariffs have just not had the limiting effect of access that they were intended to.
Great, thank you. Thinking about the US broadly, have we been losing market share to other dairy producers internationally? And what has been going on with kind of domestic dairy production in recent years?
Of course. So I think that one of the difficult parts about answering this question is that it's difficult to look at Chinese import data. So it's hard to know exactly where, again, I'm focusing a little bit on China here because they are the one that had the largest set of retaliatory tariffs, but it's difficult to know where exactly they're importing dairy products from. And our biggest competitors in the Pacific market are Australia and New Zealand. So it's likely that if the US were to lose access to any extent, that Australia and New Zealand would be able to take advantage of that and backfill that within the Chinese market. They also would then perhaps open up opportunities for the US to export to other markets that they limited their exports to. So I would like to say that the Pacific market tends to be, like I said earlier, a little fungible, where if the Australian and New Zealand exports went to China, then perhaps that the US would be able to backfill to the countries that they decreased exports to. But it's hard to say. I'd look at the slide I have up now is kind of showing a change in exports first from 2018 to 2019, and then from 2019 to 2020. And we can see, of course, for 2018 that the changes from Mexico and China are negative, but we also see some significant increases in other countries. So this kind of tends to support that idea that we're able to move, if we're not exporting to China, then we can export more to Indonesia or Japan or Taiwan. If we're not, in the case of 2020, we're actually seeing an uptick in exports to China, but also in many of the other Asian countries. So it seems to me like we are able to respond to this by moving our exports markets relatively well.
Great. And so as a final wrap-up question before we turn over to the live Q&A that Mehdi's going to moderate, I wanted to ask you about the future. So are there any trade agreements or other types of policies on the horizon that could alleviate some of the impacts that have been felt by the California dairy industry?
Yeah. So first of all, it's worth mentioning that the USMCA trade agreement has already alleviated some of the retaliatory tariffs because as soon as that was agreed to, that led to the elimination of the Mexican retaliatory tariffs. And that happened in the middle of 2019. So we're already seeing some effects there. Again, as Dan alluded to, it's difficult to know with a change in administration what we're going to see. But I think it's important to look at kind of the existing trade agreements that are out there. Did that? Oh, I advanced too far. Looking at other trade agreements in the Pacific, we can, there's kind of two main ones right now. The Comprehensive and Progressive Agreement for Trans-Pacific Partnership is a longer name for what evolved out of the TPP. When the US backed out, all of those countries still wanted to have a trade agreement, and that went forward without us. I think a lot of people likely also saw the news recently about the Regional Comprehensive Economic Partnership that was led by China and was also a number of Pacific Asian countries that joined that. We can see an overlap in the middle between the two as well, where we see Australia and New Zealand, of course, are major competitors in the dairy market in both of those agreements. So I'd say the biggest thing is looking at some of these existing trade agreements and seeing whether the US can actually enter into them. If we were able to do that, then that would open up a lot of market access for us. Of course, by refusing to join these, we're limiting ourselves and we're opening up opportunities for other competitors. So it's hard to say what is upcoming. We may just need to look at what is existing.
Thanks so much, Tristan. Really appreciate your sharing your thoughts. I'll turn it over to Mehdi to moderate the question and answer from our participants that are with us live.
Thank you everyone for the great discussion. The first question I have is for Dan. How does the concentration in the pistachio industry that Ali mentioned affect the way we should think about the impacts of tariffs to the industry?
Yeah, Ali was referring to the processing and exporting part of the industry, and there is concentration there. I don't know that we have any specific implications. That is to say, there's lots of growers, and there's certainly competition among those processors. And if you got to sort of, I don't know, pork processing or some of the meat processing, you'd be talking about 3 firms with a 90% concentration. Here we've got, I guess, 1 firm that's bigger than most of the rest of them, and then 3 or 4 or 5 that are significant competitors in the market, and Ali runs one of them. So, you know, he's right in the middle of this. But it strikes me as I look at it that there's a lot of competition among those firms. There's no, you know, I don't think this is an industry where anybody's saying there's a cartel of processors that all get along together and plan out things together. So I don't see any particular implications. There's no opportunity for supply constraint, for example. Normally a cartel would hold back production. Well, production's in the hands of the growers and the processors. You might think, could there be monopsony power on the part of these processors, the buyers? But I don't see that opportunity really there either. So I don't see the industrial structure really affecting at least the kind of questions that you're asking. But it's an open research question. If there's any good IO PhD students on the line studying industrial organization, the pistachio industry, and comparing it, for example, to almonds and walnuts and pecans and others, might be a very nice. Now that I think about it, maybe I'll write that paper. Never mind. But I mean, as a research question, I find it a fascinating research question. My initial reaction is to say it's not mostly in this trade area.
Dan, if I may add also, it's in the longer term, obviously supply and demand will still dictate where prices would be, because if the price set, no matter by whom, if it is higher than what is needed in order to move the supply, at the end you'll have too much carryover and it impacts the following year. However, in looking at price charts, sometimes it's difficult to read supply-demand reactions because the prices are set beginning of the year, and you will not see the immediate reaction. You will see it 6 months or a year later.
Perfect. Thank you, Ali and Dan. This is a related question for Ali, and part of it you already answered. Is that what's your opinion about the larger pistachio companies that impact long-term returns for the pistachio? Is that likely to be less return in the long term?
I didn't get that last question. Is it likely to
be less return in the long term?
Less return.
Yes.
Well, there are many components to it. How good an industry represents itself, especially in the consumer's eye, value proposition in terms of health aspects, and the snacking behavior. Pistachios are 90% consumed as a snack versus, let's say, walnuts and almonds that are over 80% as a confectionery. So let's say COVID was more positive for pistachios than it was for almonds and walnuts, where we saw confectionery food service being more impacted than retail and snacking. Now, other than that, it's yes, the general trend and pricing. We see walnut prices at levels now that the growers are losing money. So we see that we're going to see less and less or almost no new plantings of walnuts. In some cases, I've heard that they're pulling out walnuts and planting pistachios or almonds. Pistachios, because they've been having higher returns for the growers, now we see the highest percentage of plantings as a compared to the total bearing acres. So pistachios are now the fastest growing commodity as far as what is being planted.
The challenge is when you have returns as strong as they've been, as Ali just mentioned. Is it possible to keep those high for how much longer? Could it happen forever? We know that investments, it's like stocks in the stock market. They tend to get sometime normalness takes over. And the question is when. You don't want to be the last one making the pistachio investment, because that's obviously not a good deal. So there really is a challenge of timing here. And there was, for a very long time, people kept saying, well, you can't, this next round of almond planting has to cause the prices to collapse. And people are now saying that about pistachios. But the timing is the key issue. It obviously can't last forever, but timing is crucial.
Well, like any other investment, if it is having higher return than the average, we know that more and more money is going to pour into it until the production gets to a level where the returns are no longer as attractive.
Thanks. This is the last question, and anyone of you that can comment on it. Is there regarding the health-related tariffs and barriers to Canada and Mexico. For example, Mexico adopted tariffs on unhealthy foods several years for imported goods, such as salted nuts. Is there related tariffs in you can comment on it, or sorry if the question is not clear, I can
fully
repeat
understand
it.
the question. The question is restrictions on unhealthy food. Would it have impact on healthy foods
Right.
such as tree nuts?
There's a general rule that no country produces tax on unhealthy foods that they produce a lot of themselves. It's almost always something that somebody else is producing, and you know that makes sense. And so I treat these as just a standard garden variety protectionism. It doesn't have to be. It's motivated by something. Similarly with but so it is a concern, and I would say the biggest worry one might have, and it not affecting tree nuts, because as Ali pointed out, they tend to have a pretty good profile when it comes to health, and they've to their credit, they've done a lot of research that documents some of that. But I can see animal products, for example, being at the tail end of this, as well as some other things, especially in Europe. I wouldn't, Mexico. I'm less concerned about this sort of stuff going into Mexico. But you can imagine, for example, trade barriers. Often it wouldn't be tariffs; it would be some other kind of barrier. GMO kind of barriers are in of that sort, even though there's no scientific evidence. You get opinions, and it certainly happens in the U.S. too. We have California now has trade barriers associated with how mothers of hogs are treated. So you're not allowed to ship, starting in 2022, you won't be able to ship pork even from other places in the United States, let alone Canada, into the United States unless California approves of the housing for the mother of the pig whose pork you're shipping in. So these barriers are not just international.
And adding to that is that besides governments putting in certain barriers, whether phytosanitary or what, consumers will also be impacted. So a lot of GMOs, a lot of our customers ask us a question, while we have no GMO tree nuts, nonetheless, that is a audit question from customers, and if you click that you have GMO, that means you cannot sell to them.
Perfect. Thank you, everyone, for participating. I turn it over to Ellen to conclude.
Thank you, everyone. Okay, I just want to wrap up by saying that we plan to continue doing these ARE discussions webinars in the new year, starting in January. We have several in the pipeline here, one on the impacts of wildfire to the wine industry in California, food fraud, another session on water markets, and more. So stay tuned. We'll be sending out an email and posting updates to our website and to Twitter. Information is always available at arediscussions.ucdavis.edu. Next year's sessions will continue at the same time on Tuesdays, but we're going to go down to once a month and plan to expand the time of the sessions to go a little bit longer so we have more time for discussion. So thank you again for joining, and we hope to see you next time.